Hi guys, welcome back to another video of the Q4FY25 result season. In today's video, we're going to be talking about the electronic space. Okay, so we have four companies over here. Roughly, if you have to talk about the EMS space, Dixon, Kaynes, Syrma, and Aimtron Electronics. I've already covered both Syrma and Aimtron earlier in the previous videos. So we'll be covering Dixon and Kaynes today. Okay. Now the most popular thing that I get over here, if you look at Dixon and Kaynes, they ask for a P2P. Most of the audience asked for P2P, among these four companies. But it is a bit difficult over here to do P2Ps because although yes, in a way you can tell, by putting all the metrics together, one company will always be better than the other company, we can put the race analogy. But over here, there is a little bit, I would say a little bit hindrance from my side is because although all of the four companies operate in the same space, that is the EMS space, because the product portfolio is completely different, one is different from the other. That is why the EBITDA margins you see, it will be different also. Like when you look at the EBITDA margins of Dixon, it is 4%. If you look at Kaynes, it is around 15%. If you look at Syrma, around 8 to 9%. So when you look at over here, you might see like, oh, Kaynes is much better than the other two companies, right? That's the thought that immediately goes. But that is not the case because, there is a reason why Dixon ka margin is only 4%, and that 4% itself is a big is a big thing for Dixon because the product category, like I told you, is different. Like if you look at Dixon manufactures mostly mobiles, okay, which is a high volume low margin product. Doesn't mean it is bad, okay. On the other hand, if you look at Kaynes, they manufacture a lot of the semiconductors, OSATs, PCB board, jiska margins are way higher, okay. And obviously, it is like a low volume but high margin product, you can tell, okay. So that is the thing. So that doesn't make, just because of that one factor, EBITDA margin, that doesn't make ultimately one company better than the other. So the most important thing is sales growth over here now, and everything, all the other metrics has to go incoherent with the sales growth thing. So that is the thing. So whenever you tell just in focus, just with respect to EBITDA margins, if you tell ki like one company is better than the other, that would be a wrong way to look at the entire EMS space. Okay. Now first let us start with Dixon. What does Dixon exactly do? Dixon is a third party manufacturer. Basically they do this contract manufacturing for all the brands that is there, okay, all the majority brands that is there, with mobile phones, with laptops, refrigerators and so forth, okay. If you look at the revenue segment, majority of the revenue that is there, it is coming from mobile phones, okay. Almost 85% comes from mobile phones, आपका headwear, headgear set, all of that, okay. Then if you look at it, TV that is there, TV is contributing 8% to the revenue, lighting solution contributes 2%, okay, and home appliances recently they've started, that contributes around 4, again another 4%, okay. So but you see the majority is coming from mobile phones. As a result, mobiles, if you look at it, it is a high volume low margin product. Similarly with Cellucor gadgets also, even Cellucor gadgets, they started making mobile phones first, like when they came for IPO first time, you would see that 98% of their revenue was coming probably at one point, I would say, I think it is before IPO, from mobile phones, and the PAT margin was razor thin, like probably around 1%, like that kind of razor thin PAT margin, okay. So that is the thing. And later they also started going in, into AC, refrigerator, home appliances, because of which, PAT margin has improved a little bit. Similarly over here also. Now if you look at Dixon ka agar aap dekhte ho, sales is up by 120%, both on a Q4 as well as year on year basis. The reason you're seeing such again high sales growth is one of the reason, if you see, is over the last 5 years, especially in 2019 2020, if you see, the government had started something called as PLI scheme for this mobile phones, laptops, PCB boards and everything. What is this PLI scheme? Your production incentivized link, okay? Now here what happens is, if a company starts, like basically if they're doing a capex, the government that is there, will help you in doing the capex, on a periodic basis. They will give you the money, whatever the capex that you're doing, okay? It was done in order to like push a lot of manufacturing in India, so it can attract a lot of schemes over here, it can attract a lot of investment, and also provide this, this opportunity for employment for a lot of people. Now because of this huge, this incentive that you are getting from this PLI scheme, there was a lot of tailwind. You will also see the same PLI scheme is there even with respect to the AC companies. You will always see PGL ka, when you look at the PLI scheme, when you look at PGL ka bottom line, there is a part of it, that is coming from the PLI ka scheme, okay? You get certain kind of incentives, okay? So that is the reason yahan pe itna sara, that because of this incentive that was there, you saw there was a lot of capex happening, because of which, a lot of demand started coming in, capex happened, and that is the reason you see this high sales growth that is there is existing. investing. Okay, if you look at the EBITDA margin, like I told you, EBITDA margin is at 4, quite stable. Now let's talk about the different segment that is there. The first segment is the mobile phone segment, like I told you, which is around 85% in terms of revenue contribution. Agar यहाँ पे if you look at the order book that is there, the order book is very strong. Okay, उनका if you look at it, they cater to the brands such as Longcheer, Xiaomi, Compal, Nothing, the Nothing phones that is there, started by that OnePlus ka CEO who was there earlier. So all of these four companies ka, what they have, the order book is really great. And right now if you see, per month they're doing around 3 to 3.4 millions in terms of volume for mobile phone, and they're going to increase the capacity by 50% more, in terms of they're going to add like a more capacity over here for this mobile phones to cater to the demand. Okay, talking about this other than that, if you see, if you talk about the TV industry, if you look at the by the way, this entire mobile phone ka division, the headwear headgear set that is there, that grew by 203% the revenue on a year-on-year basis. If you talk about the TV segment, which contributes around 8%, TV ka, if you look at it, the sales growth has been down by 13%. Okay, why? Because if you look at the entire trends of TV, right, who's watching TV right now? Nobody does, right? So there is this, like, the demand itself is not there for TVs. The demand is very subdued. So what Dixon is doing is right now, they started partnering with Amazon. You get this Amazon ka Fire Stick and everything, right? So they can work something over here with them, in order to provide a solution. Along with that, what they're doing is, if the consumer front of the TV is not working really well, in the auto industry, they're trying to partner up with a lot of other businesses, trying to provide a B2B solution, because TV ka screen is also used, cars, right? Your LED ka screen and everything is used. So they're trying to partner up over here. So in order to reduce, if the consumer sector is not doing really well with respect to TV, at least they can cater to over here. Okay. The other thing, if you look at, is refrigerator. Even refrigerator has, they started it in this year only, and in spite of starting this year, they've already onboarded 15 customer. And what they're doing right now is, unka agar aap uska refrigerator ka capacity, if you see, they can do 1.5 1.2 million 1.2 million units per annum. Now they're going to increase it to 2 million units per annum. Okay. And not just this, earlier they started just with refrigerator. Now they're entering into different product mix, such as coolers, that mini freezers and everything. Okay. And other than that, if you see laptops and tablet also, again here also great great update even from here, because unka ek plant tha, in Chennai, which has started mass production and commencement. But I think in this year, it should be done, it should go for full-fledged production. And the order book again seems very strong over here, with respect to Lenovo, with respect to the other IT components that are there. Everything is solid. So in terms of, if you look at over here, sales growth is there, one thing. Take care. If you look at the capex that is there, even that is quite strong. There seems to be no headwind, at least in terms of demand and other thing. The only thing I will highlight over here are the two things. One, with respect to PAT, when you look at PAT, don't look at PAT, just look at the other things in the line items. Look at the profit before exceptional tax and items, because if you see over there, you can clearly see that the company is missing operating leverage. Why am I telling this? Is because when you just look at PAT, you will see like, oh, immense operating leverage, but that is coming because there is an exceptional item of 400 crores in the income statement. Okay, because they've sold off one of their subsidiaries or so, because of that. Okay, but other than that, if you remove all these exceptional items before the taxes, if you see, you will see that the operating leverage has been a little bit of miss over here. Okay, the other thing is over here, like I was talking about that PLI ka scheme, which we spoke in the first part of the video, right now in the starting of the video. The PLI schemes for all these mobile phones and laptops is supposed to end in this year. It was a 5-year ka scheme, started in 2019-2020. It ends over here. So once this PLI ka scheme is not there, how will the demand shape up? How will the tailwinds, like how will the tailwind turn into headwind? This is one thing to note down. Maybe, because you do not have that kind of support from the government, you're not getting that kind of incentives. Will they continue to have, this kind of margins? Will they continue to have this kind of sales growth aage jaake? Okay? That is one thing to expect, because until now also you see, right, all of their plants are running at full capacity. Now they're adding so many plants. Refrigerator ke liye ek plant dal rahe, okay? If you look at laptops ke liye, they're adding a plant. Mobile phones ke liye, they're doing a plant, right? They're doing capex left, right and center. Okay? But once this PLI ka scheme gets over, how will the growth look like? Because at the end of the day, with the current capacity, you know how much you can do. Okay? So that is one thing, I think going forward you need to look out for, is will the pace of sales growth over here come down for Dixon because of this PLI ka scheme coming over? coming down, and also the second thing is, the competition ka, intensity arises also at the end of the day. So how is that going to shape up, the entire dynamics, considering at their margins are razor thin. Okay. The other company that we'll be talking about is Kaynes Technology. Okay. Now if you look at Kaynes Technology, starting of the year they guided for 3000 crores in terms of revenue, and they guided for 15% in EBITDA margin. Okay. Now what happened is, these people, they had a lot of orders which were not executed timely manner. It was delayed due to elections and so forth, whatever happened in H1. Okay. Then what happened in the middle of the year, I believe it was in H1 only, they came and they revised their guidance scale, like maybe not 3000 crores, we will do the 15% kind of EBITDA margin, but the revenue target, because the order is getting delayed, the execution is getting delayed over here, we will do the guidance somewhere around 2800 to 2900 crores in terms of sale. But kiya kitna? 2700 odd crores they did in terms of sale. Okay. So the sales is up by 54% on a year on year basis, and agar aap Q4 on Q4 dekhte ho, 51%. Okay. Similarly, PAT also is up by 43% on Q4 basis and 60% on a year on year basis. Okay. Operating leverage mila hai, but having said that, do you see the one thing with respect to the sales growth? Okay. One, the guidance was revised, and whatever the guidance you had given, you have also underperformed with respect to that guidance also. Okay. Now now I know a lot of people will be like, अरे 3000 crore बोल दिया सिर्फ, it has been done by 2800 crore. So सिर्फ दो, hardly 200 300 crore का miss है. I will come to it later point why it becomes a negative over here for a company like Kaynes. ठीक है. अगर आप इसका भी order book, if you look at it, order book is quite strong. 660 crore का order book है, which is great. Even these people are doing a capex. They are coming up with a OSAT plant in Gujarat, and a PCB ka plant that is there. OSAT is basically for semiconductors. PCB, right, printed circuit board. They have a plant in Chennai. With the capex of this should be done by this year ka end. Okay. Now here is the thing, and if you look at the guidance also for next year, guidance is the same. 60% ka growth they're targeting, around 4300 crore. That's something in the range. Okay. Now one thing do you see with Dixon and Kaynes, right? Dixon, if you see, a very high growth engine, okay, high growth, like one, I mean, see, it's actually quite surprising that, with this kind of market cap, they're still able to do that 100% kind of growth. It is really, really exceptional. Okay. Similarly with Kaynes also. Now one thing that is common with both Dixon and Kaynes is, these are high growth, high P engine. When you look at the market, when you look at all the companies, they can be, how do I put this? They can be classified into 4 different segments. Okay? Low P, low growth, that is one segment. After that, it is low P, high growth. Okay? Third segment is high P, high growth. And the fourth segment is high P, low growth. Now the first segment that is there, low P, low growth, completely reject. Okay? I mean, they're good for nothing. There is a reason uska wahan pe low pe, there are some certain companies you'll see lying at 6p, 10p, and you'll find the stock to be very sasta, probably in single digit uska price rahega, theek hai. But there is a reason wo stock itna sasta hai, theek hai, because there is no growth. So you will have to avoid this segment completely. Then next comes is high P, low growth. Again, these are the companies like you have your HUL, all these Relaxo and everything, right? Where the P is too high because they earned this P over a period of time, right? Because of their execution. But now if you see, the base is so bigger that, at that high P, you're getting hardly 10% ka growth engine. It makes no sense. It won't make money for the shareholders, to be very honest, right? So these are the two, I would say, categories you have to completely avoid. The best category is what? Low P, high growth. Because this is a category where you will see, where, aapka, if things go all right, according to the investment checklist, as you know, right? You have the investment checklist according to which, if the company clears all the points, there is a P rating can happen. Okay? And by the way, if you want to understand the investment checklist, if you want to understand how to pick a stock, what are the metrics to look for, get the investment checklist workshop. I'm going to put the link below. But coming to the point over here, if you find a low P, high growth engine, okay, P kam hai, growth badhiya hai, and along with that, if you see all the other metrics that are there, right, usko operating leverage ho raha hai, capex hai, demand hai, everything is going well over there, what happens? Yahan pe there is a possibility of P rating. Now, if you look at Dixon and Kaynes, where do they come? They come with this high P, high growth engine. Okay? Now, see, there is nothing wrong with high P, high growth engine. But here is the thing. high P, high growth. These people have been growing for a period of time. That is why they have deserved this high P. Okay? It's like Cristiano Ronaldo. Now, can you buy Cristiano Ronaldo in your team, for like 100 crores? No, you have to pay him 600, 700 crores, to have him in your team. Virat Kohli in cricket, right? He has proved himself over the period of time. That is why now if any team has to buy him in IPL, they have to pay that kind of valuation to him. He has created that aura. He has created that brand around him. So similarly over here with these people, they have performed really well. That is why they've deserved this high P. Now, in order to sustain this high P, you have to continue to grow. If tomorrow Cristiano Ronaldo has to command that 600 crore ka valuation for him, or let's say if Virat Kohli has to do so, right? They have to continue to perform in order to show that they are worth that money that team is playing. Now, over here, what is happening? The P is not a problem. The problem is यहाँ पे एक quarter में भी for Dixon or for Kaynes growth चला जाता है. Now, when I'm telling growth चला जाता है, it doesn't have to be, it goes from like a 120% ka engine tree, to zero growth. Growth is flat, no growth, muted growth. No. But if you even see the pace of growth coming down for either of these companies, they go from a 100% engine to let's say a 40%, 60%, 80% growth engine. खेल खत्म वहां पे, ठीक है? Pace of growth coming down. Now, like I told you, the problem is not high P, the problem is growth coming down. Okay. So riding or playing this company is like riding a tiger. The minute the growth goes, be ready to suffer over here. So I would say if you're playing this kind of companies now, make sure your exit strategy is, you're that kind of a person who knows to pull out the money very, very quickly. Take care. If you're the kind of person, who will be like, oh, long term hai, that and this is not the game for you. Sorry to say this, but it is absolutely not. It will fuck you in the market if you play right now this, both Dixon and Kaynes. So unless and until, you're like that guy, who knows, who is very quickly in tracking and very good in terms of cutting the position. It's like, आप railway में हो, आप एक train में हो, and when the station comes out, you have to get on quickly. Okay, imagine वो Mumbai का local train है ना, it's all that so rushy and everything. You have to be like that person who's standing at the edge of the that train car door. The minute your station comes, you have to get on. Similarly over here, the minute the growth rate goes down, you have to exit. That is the only key over here to save your capital. Otherwise, your capital is going to get rotten over here. And you will lose out on a lot of gains also. The other thing, it is not just over here about growth also. मैं एक चीज बोलती हूँ, because यहाँ पे एक high PE है ना, what happens, like I told you, it is like riding a tiger. थोड़ा सा भी आंच आता है, like for example आंच यहाँ पे कहाँ आ गया, Kaynes Technologies में, right? A lot of people didn't understand over here कि like अरे guidance was reduced only by 100 to 300 crore. It doesn't matter which company it is. It doesn't matter if you are a company that has a moat. It doesn't matter if you are a company that has been performing for a very long period of time. Doesn't matter if you're a low P, high P, क्या है. Guidance revision at the end of the day is always a negative thing for a shareholder, because the minute you're revising the guidance on the lower end, you're indirectly telling, I promised you earlier, an X percentage of sales growth. Now I'm telling you X minus 1% of sales growth. You're indirectly telling a person when the guidance is revised that मेरा sales growth जो है, मेरा pace of growth जो है कम हो रहा है. It doesn't matter if the guidance is revised by 100 crore or 1000 crore. Understand this. Kaynes का क्या हुआ था? The minute that guidance was revised, 8,000, I think the share was trading somewhere at 8,000 rupees. It came down to 4,000 rupees. Do you understand over here? In both of these companies, थोड़ा सा भी आँच आता है. Could be the pace of growth coming down, which is a huge negative. Operating leverage goes, stock will start to consolidate. Guidance revise किया, again comes to the first point, pace of growth is coming down. It is a huge negative. So as long as you are playing these kind of engines, Dixon and Kaynes, make sure you know what you're getting into. Okay? Make sure you're very, very quick in terms of tracking. The minute the result comes, go to the BSE, check the result, and most importantly, see if the pace of growth is coming down, see if all the metrics are right in check, the guidance is not revised. Okay? Because if something like that happens, like for example, Kaynes, they're telling 60% right now. If they continue to revise the guidance again, you're fucked. That is all I can tell. Similarly with Dixon also, right? I mean, Dixon doesn't give out guidance. It has never done so, at least from the time I've tracked it. Okay? At least they don't give out guidance, but you should be smart enough to see if the pace of growth is coming down. Okay? If the pace of growth comes down, it becomes from a high P, high growth engine. क्या होता है वो fourth category में आता है, high P, low growth engine. So this transition, as long as it is in the third category, high P, high growth, you will make money. But the minute it goes from this high P, high growth to high P, low growth, now you are screwed, I can tell you. That is that. Okay, so that's that with Dixon and Kaynes. We've already discussed, like I told you, Sirma and Aimtron, right? You can check that video. It is there in the Q4FY25 playlist. Sirma का वही margin का problem है. I mean, margin का guidance is a little bit weak. We do not know how that will shape up. And Aimtron का, at least as of now, there is no issue. We'll have to see whatever the guidance they have given. They have to be on track, and in H1 we should see they are, inching up towards that guidance. ठीक है? So that's it for today's video. Bye.